Many of you just filed your taxes within the last month. I mean, I'm getting ready to file my taxes this week though. I always file an extension. But during those discussions with your accountant, things have turned towards the topic of Biden being president. His tax plan isn't even finalized yet, but if it gets through, we have addressed some strategic changes in the way we steward your assets. In fact, the number one question I'm getting in client meetings right now is, have you thought, Dave, about Biden being president versus Trump and how it affects, my financial plan? And the answer is yes. Let's see. I started thinking about that at 2 a.m. on November 4th. Last year, folks. Last year. Clients who work with us for years can see that we started making changes in these companies that have reduced or cut dividends because of the pandemic, but that are strong American companies who can play the game at hand for the next 4 years at least. You see, under the new Biden plan, capital gains tax may go up and match the ordinary income tax rate. Dividend income would become more attractive to investors, and as it's taxed at a lower rate, just last week, in fact, Amazon issued a huge amount of debt, some as long as 40 years out. Now you may be wondering, why is Amazon? They've got more money than the US government. Why are they issuing debt? Well, I believe that Amazon's accountants have to be forward-looking enough to prepare for Biden's proposal. This initiation of debt allows a corporation to write off the interest of the payments deductible. And keep in mind, corporate profits used for buybacks are a tax liability. So if Amazon were to use the funds that they raised by the debt issuance to buy back company stock and then pay the shareholders a dividend out of their corporate earnings, the tax liability is now passed to the dividend recipient. If you own Amazon, that's you. Corporate tax efficiency 101. Now, I suspect we'll hear many more companies increasing their dividends over the 2021 to 2022, 2023 years. With Biden's plan, it's very likely that this will become standard practice. Every 4 or 8 years, something happens as our presidency changes over. We just have to pay attention. But it's a game that repeats and repeats. And recognizing the game and recognizing how the game can affect investment portfolios is of great importance. The tax game will change, and it's important that you're working with a financial planning team that knows how to help position you within the markets. Now, how do we take advantage of this? Well, COVID created a bear market, and then immediately after the bear, a new bull market. And if you blinked, you missed it. With these new changes, you're likely going to want to build a portfolio that is more Rip Van Winkle than Robin Hood. You see, ever since last fall, I've been looking at all of your portfolios, and I've been thinking about the stocks we'd still feel comfortable with if we all went to sleep for 5 years, aka Rip Van Winkle. Do they pay dividends? Do they generate cash flow that's passed on to the investors? Take a look at the stocks in your portfolio. I believe some of those are truly in better financial shape, literally, than the US government. Now, all companies or stocks benefit from business. Some benefit from people actually staying home, and some benefit now that we're reopening and people are traveling again and face to face. We're always on the lookout for opportunities to add companies that are, 1, in a sector where there is demand for the products and services, 2, are best of breed in their particular marketplace, and 3, are selling at a discount to what we believe is their fair value. My belief is that over the next 4 years, unless a company comes out of left field, there will be less turnover in your InvestNet portfolios that we manage as these tax changes go into effect, if they do. We are actively working on ways to take advantage of this administration that are somewhat different than in the past, but history always repeats itself. So if you're a current client, we'll be talking about these changes with you once the Biden tax plan is approved. And if you're not working with us yet, let's chat. First meetings are always complimentary. We'd love to give you a second opinion. So give us a call. We can look at what you're doing page by page, let you know how it looks. Now, as always, please consult with your tax professional for additional guidance regarding tax-related matters. We're not CPAs. And for advice appropriate to your specific situation, please consult a financial professional.